Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, May the 23rd. The year's 2022. Let's talk trading. Risk, part 13. As always, these videos are for educational purposes only. Your results may differ from mine. Risk. Last night, last Sunday, the weekly open and gap video, I mentioned about trading, being boring, and if you want to get good at it, you're going to have to do something, the basics, over and over and over and over and over again till you really master them. And that's about all you need. But as people, we do sometimes fall to the SOS or shiny object syndrome. And we see some indicator or method out there that just catches our eye, and then we have to go look at it. Well, we pretty much know what's going to happen when you do that. You're going to wind up losing. And see, so there's a risk when you change what you're doing, because you're going from the known to the unknown, from the practice to the not practice. Now, somebody could counter and say, well, what about all your methods? They're all horizontal line methods. And I go, yes, you're true. That's true. But the thing is, you're going to trade at horizontal lines. You're going to trade at different times. You're going to be trading for different reasons. So there still might be something that you're going to need to master. I mean, if we take a look here at the price action simple chart, and we've got the Walmart lines, we're using 1 hour candles. We can see what happened. We hit 1.26 double O, and price stalled. But if you look here, same thing here at the 125. We were right here, and price was stuck around here for a while, and then it took off finally. So there's a 100 pip move right here. I mean, there's a way you could have entered it. You could have entered it on the double O. You could enter it on this inside bar break. You could enter it on the Walmart break here at 25.10. There's lots of different ways to have entered it. And each one, of course, when you enter, that's when the risk really begins. Because if you're not in the market, you're not at risk to the market. But back to the point I'm making about when you change, that's when there's a risk that you're adding another risk into the equation. So, for example, in this hour, you can see we're at the low of the previous hour, which is above the Walmart line at 60. So the question is, would you have taken the trade, or would you wait to the 60? So we know price is going to either hit this line and reverse, or it's going to hit this line and break through. I mean, that's pretty much all price can do, other than it's going to stay at the line. It might stay there for a little while, but sooner or later, it's going to move away from that line. And of course, we can go all the way down to the 1 minute chart and take a look at how many times price oscillated through that low. This is the beginning of the hour, and then price went all the way down through the 60. So there was an opportunity to make 3 pips. Here's some more opportunities. You see inside bar, outside bar, inside bar, and then another outside bar, another inside bar. So that's all movement. Currently price just dropped through 60 again. Give you an opportunity, take maybe 1.5, 2 pips, depending on commission and spread. Now there's more. And you can see price entered through these into the wick zones there. Now price is coming up through the wick zone off that one ball. So that would have been an opportunity to take a trade, take a wick zone trade right here, even on the 1 minute chart. So as we say, look left. So let's go over some of the charts, because usually when Wallball and I are talking, we don't always go over the chart. So for the month, we're 404 pips off that monthly low. You can see here we crossed above the previous month's low, and we're right now in the wick zone of the previous month, the lower wick zone. For the week, we're 92 pips off the open. And so the low is actually 0.2 or 2 points below. The low of the week is 2 points below the open, but you can't even see a tail here. But I noticed this says 97 and that now says 98 because of the rounding. And we actually hit the high of the opening range here for the month. And we've pulled back now. As I mentioned in yesterday's video, we broke out of that Friday inside bar, which you'll see coming up shortly. 957 below the yearly open. 413, 414 above the yearly low. So a lot of movement there. Seasonality, once again, price peaks in very early May and is bearish till mid-May. A bottom typically forms in mid-May, which that bottom was on May 13th, which is pretty much after the second full week of trading in May. So seasonality was pretty much dead on this time. Inside bar that I mentioned, lots of inside bars on the day, on the week, even a few on the month. But we're 70 pips above the high of Friday's daily inside bar there. 132 pips on the day, as you can see. More pairs are over 100 pips in range than not. And for some reason, it looks like the Swiss yen is the biggest mover in range. Anybody out there trade the Swiss yen out of curiosity? On the hour, we've turned green just now. So remember, price was below the 60, turned around. We're now at 72. So once again, just playing price action can net you a few pips. Looks like we had a couple of times where red rats got their fill of the cheese. Green rats never really had an opportunity, but it looks like maybe 1, 2, 3 times. Looks like we hit R4, weekly R1 at that 125.99, and price reversed from there. On the daily pivot, we took out today's pivot. On the weekly pivot, we've missed it. We're going the wrong way. So we've added another missed pivot, weekly missed pivot to the list this year. We've got 4. Looks like we might end this year with a missed pivot. We'll just have to wait and see. On the daily wick zone, in and out. And you can see here this aqua colored line, that's the monthly open. And we're just 2 pips below it at the moment. High, the lower high, we had that trigger I mentioned. Here, you could get in at the wicks, or you could have taken it at the lowest high here at 25.60. That's good for 77, or good for about 17 pips at the moment. And if for those fib traders, you can see we just about did a 50% retrace here. That's what these gray diamonds show. And for those of you who liked ATR, you can see we're in the upper ATR zone. We hit it once in reverse, so we're back in. Once again, showing a simple price action. It looks like we stalled at the previous H1 high here. On a blank chart, this is M30. We had 4 reds in a row. Now we just had a green, or we're having a green with about 14 minutes left in the hour. And on my what I like to call my map, you can see there is a missed, let's see, it took out that pivot, so that's not a missed pivot, but there was this missed pivot here when price was making a low that needed to be taken out, and you can see it got taken out. Then it left the missed pivot, it got taken out. So you can see here, there's a missed pivot there and a missed pivot there. That may or may not get taken out, but that just gives me a target to look to see if it'll get taken out or not. But, you know, once again, we looked at a lot of different methods there. Buy zone, rat zone, wick zone, fading the pivot, you know, lower high, higher low. Lots of different entries. But as I stated, once you put the trade on, it's now time to look at things differently. You're looking at managing the risk, managing the money. In fact, I even posed a question years ago, if not a decade ago. Do you use the same chart for entry or the same chart for exit as you do for entry? Or do you switch charts? Because once I put this trade on, it doesn't matter about missed pivots. Price is going to do what price is going to do. This isn't going to help me. So I'm curious if you guys could answer in the comments somewhere. Do you use the same chart for exit as you do for entry? So, fellow traders, the reason I asked that question is because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.